Hello and welcome to this Insurance Network webinar where we are looking at overcoming the technology and operational implications of Blueprint 2. Today's webinar is very much a prelude to the Deep Dive Day taking place in London on the 23rd of May, where we'll be looking at the issues and challenges for all organizations in a lot more detail. And this webinar is not really about what is the blueprint. This is very much looking at what are the operational challenges we should be thinking about and developing a checklist and series of questions that will be helpful for you when you get back to your organizations. But also we will use those to inform the workshops on the Deep Dive Day as well. So with that, Steve, perhaps I can start with you and just to give us a quick update, I suppose, about the progress so far, some of the dates that we should be looking out for, and I guess the timelines in the medium term.
Yeah, thanks, Jeremy. Good morning, everyone. Let me start with some of the stuff that we have delivered already in Blueprint 2. So often there's a lot happening, and it's kind of it's easy to lose sight of some of the stuff that we've already been working on. So let me start with faster claims payments. So this is something that has been live for a little while now, allows claims to be paid in the delegated space much quicker. Big kind of shout out and plug to people for if you write delegated business and aren't using faster claims payments, it's a great opportunity to transform the claims experience and be much more efficient in your capital distribution and not have it locked up in loss funds. So that's one piece of the puzzle that's been out there for quite a number of months now. We've also spent a lot of time with the Data Council, very much assisted by Sheila Cameron and her great stewardship through the LMG on getting the data standards over the line. So we've had the core data record for about a year now. We've just updated that with version 3.2. We've got MRC v3 that's been finalized. Both of those things came out at the end of March, and we've just finished the process roles and responsibilities consultation for how that will all be assembled and put together. The market reform contract piece is there ready to consume. So getting ready for the new kind of digital world requires people to get their contracts into the right shape and format. That's another thing that's there on the shelf for people to go and utilize. You can access that on the LMG website. I'm very much encouraging people to start to think about that. That helps you get the contract and importantly the data into the kind of right shape, ready to go for when the services come online. Then third thing that's been delivered is sequences 1 and 2 of the build plan. So we talk about the build plan as in the joint venture as 5 sequences. Sequence 1 is kind of foundational plumbing, kind of call it first fix if you're in the building trade. That got us a lot of the baseline capability. Sequence 2 brought online the first customer service, which is the global service, and we are starting to get people onboarded into that, and hopefully the joint venture will have a customer using it actively in the next few months. That is a new service, really. So these are things that have been done typically by insurers in the kind of global context that can now be done through the joint venture, through some of the new digital tools that are being built. Sequences 3, 4, and 5 are the bit that typically in the London market, though, we're most interested in, and those build on 1 and 2. Sequences 3 and 4, so that is the open market premium and claims for sequence 3 and the delegated premium and claims in sequence 4. That is due to complete at the end of Q1 from a build point of view and be ready for deployment. Sequence 5, which is the digital gateway, which captures the core data record information, that's going to be at the end of Q2 24. So next year in H1, we'll be finishing the build of those different parts of the puzzle. The joint venture are also working hard on the deployment strategy around that. Both the deployment strategy and more details on those sequences is something that we're going to be talking about at some of the events that are coming up. Particularly, some of those details will be in the June Blueprint 2 event, which follows the event that you're running later this month. So lots of opportunity to hear more about that, I think, in the next few months. And in terms of how things are progressing and overall where we're at, I think we're in a really good space, particularly now with Chris Halberd joining recently as the CEO of the JV. So things are progressing quite well, and I think we're in a good space.
I guess the first thing I would say is I don't think organisations need prompting from me or kind of Lloyds or the joint venture to think about their digital strategies. That's what they do. I guess my observation would be that there are a few very common themes in the market today of where those digital strategies are focused. And I think the opportunity, the sort of golden opportunity here is to link those to what's going on with Blueprint 2 and the new digital solutions in the joint venture. And if you can bolt those two things together, I think there's a huge opportunity, not just to sort of digitize front end of business, but to digitize end to end of business, and that could really unlock huge benefits for organisations. I guess the key areas where I'm seeing a lot of activity in the digital space. I call it digital trading, which is probably more how brokers would think about it. Underwriters might call it distribution, but really that interconnect between brokers and underwriters. How does that come together? How's that connected? What data are they exchanging, and how and when, and how rapidly can we move from a customer talking to their broker about the kind of risk transfer that will benefit them to actually having a bound insurance product at the end of it. The digital solutions in that space are evolving pretty rapidly. So that's driven in part by brokers and some of the facilities arrangements that are being put in place, also being driven by underwriters looking for more efficient methods for them to do business. So a lot of innovation there, a lot of activity both within brokers and underwriters and within sort of market service providers. So a lot of investment there and exciting opportunities. And then I'd also say, particularly in the underwriting firms, a lot of investment in what I would call digital underwriting. Some are looking at fully algorithmic underwriting, particularly in the follow market. Others not necessarily algorithmic, but data enabled, more data rich, more data in the hands of the underwriter, more tools for the underwriter to allow them to focus on underwriting and not all the things that go around underwriting, like having to complete their kind of compliance and sanctions checks and fill in technical pricing models and so on. So putting all of that data and automation in the hands of the underwriter so they can be more productive, see more quotes, be focused on the business that they want to be writing, and ultimately get a good price quicker. So I guess all of those are enabled by a few, really a couple of key enablers which really do dovetail with Blueprint 2. One is the connectivity point. I mean, the phrase API, you should have a klaxon for API. And there's a bit of a joke that the answer to every problem is an API. Well, connectivity is great, but it can also be quite complex. So there's a big enabler about what your connectivity strategy, your API strategy, how you're going to work that. The other, which is where everybody is looking and spending time, is data. A more data-rich environment, the ability to exchange data, the ability to analyze data and make good use of it is fundamental to all of this. So I know there's been a lot of conversations around the CDR and the use case of it and so on, but the more we can get an exchange of digital data through that placement process, then obviously the more the underwriters can use that and work with it and be more responsive and quicker and more insightful in their responses and drive the pricing that they want to drive from it. So I think that whole data-rich environment, the CDR, how that then works through the placement process, the underwriting process, and then ultimately into accounting, settlement, regulatory reporting, and all of the processes that happen in the operations functions. And probably the bit of Blueprint 2 that doesn't quite get the profile that it should do is claims. And there's been so much time that we spend looking at the underwriting process and the placement process, but ultimately the more data we have and the more data rich that environment is, it's a real opportunity to transform claims automation in there, insight, avoiding some of the sorts of issues we've had recently around wordings and lack of clarity around wordings and coverages and so on. So that real opportunity there. I think of all of that as a holistic sort of digital strategy, and some of it is part of Blueprint 2, some of it is enabled by Blueprint 2, some of it is just a really nice dovetail that the two fit together, and you sort of multiply the benefits, particularly in that claims area, for example, if you look at these things all joined up. So I guess that's my take on that.
And Steve, that's the point, isn't it? I think we've talked about it in the past. It's you're kind of, I think you described it as a coat hanger upon which things can, digital initiatives can be, and so organisations really need to think about their strategy. There's a question here about
just building on that. We're when the internet was created, the internet didn't create the digital experiences that we have today, right? And in a way, we're trying to do that for the London insurance market. We're trying to create, the coat hanger, the rails, the infrastructure. But people talk about in the claims solution, the scenario of there's a flood or there's an earthquake, and then how in real time do you kind of get to a point where that has come through and automatically notified a managing agent that that's happened and those claims have kind of initiated. Those things can happen building on top of what we're doing, but the solutions that we're building don't make those happen on their own. They need people to make those connections of that telemetry and those third-party solutions that are going to bring that data in. But that's now possible because we're dealing with data and we're dealing with more modern API services, Klaxon for me, that allow that integration to happen. Trying to do that where you then have to walk a piece of paper into the room, either physically or digitally, it just doesn't work. And so I think that's what, for me, like Jonathan said, these are the opportunities that come in the future, and I think they're the exciting things to look out for once we land the kind of basics of how we do business in a more digital way.
Yeah. So we've got some questions coming on the chat, so thanks for those. Perhaps we can just start with what or who is the joint venture?
Yeah, I saw that. I mean, I think Felix has helpfully answered it. So, we've got XCS and XIS is how you might know it, or exchanging. There are lots of different words to describe it. Hopefully that helps people understand what I mean when I refer to the joint venture. It's probably also worth mentioning when we talk about Blueprint 2, the Blueprint 2 team is made up of people that work for the joint venture, people that work for DXC as the SI firm delivering the software into the joint venture. It's made up with some people from Lloyd's and also Kim and Louise in particular from the RUA spent a lot of time in the Blueprint 2 tent, as well as Rob and some of the team from the LMA. So we talk about Blueprint 2 as having kind of one community. All of those people are involved in Blueprint 2 because it is a London-wide initiative that needs all of those different parts to come together.
And then there's another one here from Mark on the timing. So when does MAT for sequence 3 and 4 start?
Yeah. So MAT, first of all, what is MAT? Market acceptance testing. So in the baseline plan that was put out at the end of last year, that was due to start at the end of Q1 and run for a 6-month period. Certainly, since I mentioned Chris Halbert had joined the joint venture recently. Chris, I know, has a perspective that we need to maybe think a bit differently about how we're doing that testing, partly to try and shift left some of that earlier in the life cycle, and partly just because it's not necessarily the most efficient thing for the market to have quite a complex, significant kind of extended period of all testing together. There are other ways to think about that, particularly given the way that some of this stuff is being developed. So there's going to be effectively a look at how we're going to deploy and how we're going to test this. That's going to be coming out in the next kind of 6 to 8 weeks. And as I mentioned, there should be more on that at the June event that we're planning on Blueprint 2, which follows yours. So that's when we'll be kind of explaining a bit more about what that's going to look like.
Cool. A couple of questions on the CDR. is it too early to ask? Any CDR data coming back from carrier to Lloyd's Gateway is expected to be in which format? Is that?
No, I mean, it's not too early to ask that. So, I mean, it's funny because I kind of come from a world before I joined insurance where, you know, a lot of flat file and XML use was something that was kind of in the archives. But here it's kind of like, you know, sometimes cutting edge technology, which was news to me when I joined the insurance space. But what we're trying to build for all of the solutions is we're trying to build everything around both modern REST APIs as well as backwards compatible SOAP services that support XML. The CDR in particular is going to be available as a JSON file through a REST API for people to retrieve. So that's how you should expect to go and fetch that. The list of APIs that are going to be published in the timelines, we're conscious at the moment that's available on blueprint2.com, but it doesn't have that specific service on there. So we are working to get a specific timeline around when that's going to be available in draft for people to look at, because I know that the next question will be, when can I look at the REST API spec so I can start to think about how I'm going to connect my system up. But that service in particular is going to be a JSON first REST service that people will be able to utilize.
Great, thank you. And follow up on that, which do carriers need to exactly align with the list of values that Lloyd's expects, or is there flexibility?
So the aim of publishing a standard is that we all align to a standard. I think this is about allowing both machines to interpret the information and have automation, but also allowing systems to reconcile and store it. If I use a really simple thing, if we all talk about premium in different ways, and at the moment we do, it makes that quite complicated. And yes, there are things you can use to translate stuff, but for me, that is adding unnecessary effort. The reason we've aligned the work through the Data Council with Accord is because we recognize that Accord typically is the standard that most systems are built in. So in this context, most PaaS systems are built to those standards. So the CDR we spent quite a bit of time with Accord aligning it to those standards so that in theory, things align out the box. Ultimately, what carriers choose to do in their systems and what brokers choose to do in their systems, ultimately that's on people to work out their own strategies. But my advice would be try and stick to the standard, store it in that way, because that should be the same way you're using and sending data in business that's being written in the Lloyd's market, the company market, or in globally in other markets. And therefore, why not have one standard and one way of doing it? That just surely makes life a lot easier. And that's what we're trying to achieve by being Accord aligned with all of our data standards.
Yeah. So let's move to a question that was submitted before the session, which is around kind of responsibility for data and data processing, and whether kind of there's clarity over what brokers need to do and how they need to change their operations in order to firstly capture that data and then record it through the systems or APIs, and how much of that they'll need to change. Is there kind of clarity on the responsibilities and roles and what needs to be captured at kind of that front end?
So the process, roles and responsibilities piece has been trying to help clarify what needs to be captured by who and when. I think Rob Myers has done an excellent job of keeping the team focused on that problem. The reality is it's going to be a journey to getting to that answer for a lot of people. Really, we're trying to get to a point where data is captured as early in the process as possible. And by the time that you get to the point of binding a risk, you should have all the information. Now, that is true today, largely. All the information is there. The problem is today, all the information is not necessarily structured, and it's not necessarily all at someone's fingertips. And I think that's the thing that's going to need to change, which is we're going to need to get into the habit of getting that more structured and more organized earlier in the process, rather than binding the risk and then kind of dealing with those problems later. And there definitely are some process changes and some operational changes that sit around that, as well as for some people some changes in the data that's stored, because some people just won't store this information in their systems because they haven't needed to. And I think, Jonathan, I mean, you must kind of have some of those conversations with people, right, where it's not about not knowing all the information about the policyholder and what you're insuring, etc. It's about having that in a way you can send at the right time, which I think is really different, right?
Yeah, that's exactly right. And I guess the other sort of, to go back to using analogies from other industries, you know, one of the analogies that sometimes is helpful is if you think about the way you submit a premium into the London market, analogous with the way you submit a credit card transaction into a card provider. There's a set of data that needs to be provided. It has standards around it. But if you as a retailer want to ask your customer to key that in on a website, that's one way of capturing the data. If you want them to walk into your store and tap a cardless payment machine, that's another way of capturing it. Or you know, the old-fashioned, you scan it on the carbon paper and go and key it in later. There will be multiple ways that this data can be exchanged and handled between firms. I think in a lot of times when I talk to organisations about it, Steve, you're spot on in the sense that this data is somewhere around, and quite often it's actually already been processed multiple times. That some of it's already been put into exposure management systems or you know, compliance and sanctions checking tools, and you know, all sorts of systems that are already processing this data, but it's not necessarily available in that structured format at that point in time in the platform that connects in. You know, to the place you need it to. So I guess my encouragement to firms is that there's sort of there's probably three ways you can approach this question. One is to sit back and ask the Data Council to tell me the answer. The other is to jump in, get involved in the debate and influence that answer. And the third way is to be a bit creative and go back and look in your own organisation and say, well, how can we make this work for us? Because this data, it's not just useful for you know, for premium submissions, it's useful for insight into our customers, for our own, you know, regulatory purposes, for our own pricing and profitability purposes. So actually, let's take this opportunity to look at how we structure and work with this data through our trading processes. And as a byproduct, yes, it'll be available for submission in a CDR. But actually, I can think of 50 uses for that data in my organisation if I had it, you know, to hand in a structured format. So I'd encourage you to take that on as a question for yourselves, as well as kind of looking to Data Council and others to look at whether there are standard market protocols we can all kind of follow to make it consistent.
And I think that comes back to my original question when we're saying it's a wider, you know, this fits into a wider business and transformation agenda that we're all looking at. And the other thing to say about it is that it will also drive innovation, which I think you alluded to there, Jonathan, because you may either take a piece of data and go, we could use that over here in claims where we haven't used it before, or vice versa. And suddenly you're delivering more value to clients. Hopefully you're finding those efficiencies, and kind of the two things come together and move things forward.
That's exactly right. And quite often when I talk to firms about this, rather than sort of sit there and say, well, this is how it's going to work and this is how it can benefit you, I just ask the questions, well, how would this benefit you? And some of those, you say, well, if you had this data available at this point in time, well, what would you do with it? And then they kind of, you know, the sparks start flying. They go, well, crikey, yeah, that could be really handy for this. And well, I could aggregate it with that, and I could drive this insight, and that would tell me things about my customers I didn't already know. And you know, so that I think there's great opportunities there. So that's part of what I'd encourage people to do, and debate at the event. It would be great to hear that debate going. Is you know, if you had this data, what could you do with it, and how could you share this? What are the ideas? Because it's not all about, you know, Steve and the team coming up with all the answers and everybody likes it or loves it. There's opportunities to make this work for market firms to their own advantage.
Definitely. And I think that's what one of the outcomes will be of the event, is we'll have not only a checklist of things that you should be thinking about, but also you've had some conversations with other organizations that will help you kind of shape your strategy and see where best practice is and benchmarking and all that kind of thing as well. So just a couple of other questions here. One about cybersecurity, which I guess is a hygiene factor, but absolutely critical.
Yeah.
So cybersecurity.
There's a couple on that, I think, Jeremy. Actually, the one above and the one below. I mean, the technology stack for all of the software that's being built is all going to be hosted in AWS, so in Amazon's cloud services. Lots of people, I'm sure, will know there is a very strong kind of regulatory oversight on how all of that's done in financial services, and the work that we're doing around that is going to make sure we're absolutely kind of compliant and aligned with all of the kind of expectations of cloud deployments in 2023. And so, whilst this might be a new thing for some organizations, a lot of people are now moving to a space where they're utilizing public cloud. It's quite a standardized thing to be doing. The benefits that it gives are huge amounts of scalability and resilience, which are really helpful. Lots of cloud native tooling that we're able to utilize to build things quicker and evolve them faster. And actually, lots of opportunities to do some clever, really whizzy things from a security point of view, and removing that reliance on managing infrastructure, which is just probably not the most effective thing to do in this day and age. So, but all of that is being built with very much a lens of knowing that we are all regulated entities, and there are some quite stringent and specific demands and asks from the FCA in particular around this space, and so we're kind of taking all of those things on board as you'd expect. So I think that kind of covers a few of those different points there, Jeremy, that people have mentioned.
Yeah, there's a nice myth-busting question here. I think I've heard, as we all do, the MRC is still the source of truth and overall CDR as it's a signed contract. This is a response to Bob's thing.
I mean, look, you're always let's be honest. Wherever you go with anything, the signed piece of paper is the thing that you're going to sit in a court of law and debate, right? The key thing that we're going to make sure that happens is that the data is an accurate reflection of the contract, and that's probably the most important thing we need to make sure happens. And the way we're going to do that is by working with anyone that's submitting data to the gateway to make sure that they've got processes and practices in place to make that happen. Now, if you're using data, so people will hear me talk about data first, this kind of happens out the box, because you'll be producing contracts and you'll be producing the CDR using the same underlying data. So then it's dead easy to keep those two things aligned, and that the CDR is going to be an accurate reflection of the MRC. Where it gets tricky is if you're doing some extraction of the MRC through some sort of OCR or some sort of AI extraction tool, because you need to make sure that the thing you submit in for processing is a reflection of what's actually been signed and not something different. And so we're going to be working to make sure that anyone that is sending it in and using that type of technology has got some proper controls in place to keep those two things in alignment. And that, for me, is a really important thing that we need to make sure that happens, because otherwise this can't be an irrefutable record that is the version of the truth that managing agents can use, that brokers can use, that we can use in the joint venture to process business. So we have to make sure that that happens, and we'll be working with people to make sure that they put the controls in place to achieve that.
And just a couple of bills, I agree completely with all of that. But firstly, if we think about the way the market works today, the contract is the contract, and the LPAN submissions to the Bureau are a far less reliable interpretation of the contract, which are then manually read and interpreted. So in some respects, it's not dramatic change. But I think I often hear concern about E&O or contractual issues or things like that. But I think we are talking about different things, because we're talking about a contract between an underwriter facilitated by a broker with a customer about the insurance coverages that they have in place, and the other is a payment instruction that goes through a bureau to account for that. So it's actually not the end of the world if there is an error in the accounting and payment instruction that can be corrected. You can refund that and go. So I don't think people should be so concerned that if there was an error created by kind of for the reasons Steve articulated, well, it's not the end of the world, because that kind of happens today, and it gets picked up and checked in the controls you have in finance functions and in the bureau, and then it gets corrected. So I don't think people should be overly concerned about that. But as Steve said, what we want is an authoritative, irrefutable record that is a fully accurate reflection of that contract, and we reduce as far as humanly possible the risk that those two get out of sync, and then it's not an issue to anybody either way.
Yep, great. So I've just had this one sent to me. Practical advice on how to enable usage of the CDR within our organisation. So I think this is somebody who's just, I guess, starting out on the journey. Practical advice of where to start, Steve or Jonathan?
Well, I think the first place to start would be go and look at your contracts and your contract templates and think, right, how do I get into this kind of MRC V3 format? Because there's about 3/4 of the CDR contained in that document. And the document will adhering to that new standard of contract will help you structure things in the right way. So that kind of gets you 3/4 of the way to having a CDR, because then you kind of look at the CDR spec and you go, well, I can pick out all of these different data elements that I require for this contract, and they're all going to be kind of structured in the right way. And then there's kind of a small amount that will be required in addition to that on top. And that gives you a kind of view of, well, let's say I write, marine business. Where am I on that? Do I have the data? Back to the point about, do I collect it at the right point in the process? Is it structured? It gives you a kind of starting point to understand, where am I? And we've got a couple of people in the team that can help. So, my advice to Jez would be, we've got what we call the EC10 engagement team. If you don't know who your engagement rep is within Blueprint 2, drop me a note and I'll happily kind of connect you up. There's some information on that audience as well on the blueprint2.com website. But we can kind of help people do some of that. Then there's the next practical step I'd be doing is I'd be engaging with my technology team, either my internal technology team or if I work with a third party, and I'll be having a conversation about, how am I going to send this data at the end of it? Am I going to use a placing platform to do this on my behalf? Am I going to do it directly as a broker? If I'm a carrier, how am I going to receive this into my organization? I'd be having some of those conversations. And then that should be all things that are there and available to do right now to get you into a really good space where you kind of are starting on that journey of understanding how to kind of get the data and what you've got, getting the contract organized, starting to think about how you're going to get to submission. By the time you've done all of that, the APIs will be ready for your technology team to start to test and integrate into, and then you can start to go forward and actually try some things. I think that's the route I'd go down. And please reach out to the engagement partners. They are the people to help support with that type of activity.
Yeah, it's terribly boring to agree with you all the time, Steve. We should try and find something to argue about, maybe. But I definitely agree with that. I'd also just go back to my point around asking lots of questions. So take that data set and walk it around your organisation to all your functions and say, if I could get you this for every risk we write, at some point during the placement process, maybe a couple of hypotheses around when it might arrive. Well, what could you do with it? Would you want to aggregate it? What kind of insight would that drive for your organization if we could do that for every single one of our risks and every single one of our customers? Start walking it around and drawing those, because there will be other use cases that are not related to submitting a premium for payment that you can drive from having that structured data. And it might start with simple things like, well, at the moment we have somebody key that in over there. Well, I can stop them doing it because I can take it in, in that format. But then it might drive into really interesting areas like, well, if you're a broker, what insight could you provide to your customer when they come to you asking for coverages based on the insight you've got from all of your other customers from the structured data you're now harnessing, or as an underwriter, how could you feed that into your underwriting, pricing, exposure management, capacity management processes to look at your portfolio, maybe in a more timely manner, maybe in a slightly different way. I think that would drive lots of really interesting conversations, which might just give you a different piece on the kind of benefits case and business case to invest in this.
So a final question here, as we're kind of running out of time almost. So about the availability of the CDR to carriers. Steve, I just wonder if you just want to comment on.
So the process, roles and responsibilities kind of position on this is the CDR will be formally sent at the point that a carrier puts their stamp down. Now, Elliot is right here. There will be a lot of carriers that even when they're looking at the slip, they might enter some data into their PAS system. But what you'll be able to get at the point of putting a stamp down is a read on some of that. The challenge we're going to have is how many CDRs are going to be complete at that point, because also in the process roles and responsibilities, we've recognized that we don't want to block placements happening. So we're not bouncing CDRs if they're incomplete at that point. The time they have to be complete is before accounting happens. So I hope that over time, what we start to see is more and more completion at the point of stamps going down, in part driven by carriers asking brokers to get the data correct at that point in time. But we're not in a position where we're going to be saying it has to be complete at that point, because we don't want to impair the markets. One of the beautiful things about the London market is that you can kind of get cover quite quickly in place. But you will be able to access it from the point that a CDR exists, and depending on how you evolve your processes and what you need to have at different points in time, the intention is that we remove as much as we can the need for carriers to read key information. But I do think it's going to be a joint effort by carriers encouraging brokers to get more and more of that complete over time, so that you don't just end up with the CDR being just like the name of the client and the line you've put down. So it is going to be a joint effort to try and shift that forward. The only specific milestone we're putting in place is before accounting, and at that point in time, probably for many is too late, but it's still a much better position to be in than what we have today, which is there's no structured data to pull down to check what's going on. Everything relies on third parties to key information in.
Yeah, and just I guess a couple of observations. I think in the scenario of the trading partners on that transaction do the absolute minimum required in order to submit a premium for processing at the last possible minute, then the CDR will arrive, at that bind point, having not been shared before. And in the use case where you want to use that CDR in order to eliminate data entry into your PAS system, that will be too late for it. That is true. That said, I would hope people will talk about the benefits of exchanging structured data earlier on. The placing platforms I know are already working on this basis, as are many brokers and underwriters, either peer-to-peer or in their own trading platforms. So the CDR should really just be seen as a continuation of the trend of exchanging more structured data through the placement process, and the culmination of it when you reach bind, that you submit a premium for accounting and settlement. So I would look at it in that context of what I called earlier digital trading, and how does that work, and the CDR being a component of it, and the benefits of getting that. The other thing I would say is the exchange of CDR at the point of bind, even if that is the minimum you do, is still a radical step forward from what we do today, because as of today, the USM that you get from or BSM that you get from the Bureau doesn't arrive until at least typically 30 days after inception of the risk, when the LPANs are sent in, and then they're subject to lots of manual rekeying and submission in validation in the Bureau and then sent back. So if we have the equivalent of that signed confirmation at the point of bind, that is still a radical step forward, and it allows it allows firms, particularly underwriters, to then look at how would you re-engineer your back office around your credit control, your capacity management, your reserving, all these other areas where today we have this big gap between written and signed. In the future, we'll have confirmation of those signings, at or very soon after bind in the form of a CDR that's authoritative and has been validated through the gateway. So I still think there's significant benefit there to be had, but it may not be benefit in the form of reducing the data entry into your PAS. It may be elsewhere in your organization.
Great. Thank you very much.